Hey, this is June from Turning Point Life Investment, and this video is for the week ending in June 27, 2009. We're going to start with S&P 500 using SPY 3-year weekly view. So you can see here this week we ended it with a small doji candlestick. Let me zoom in for a bit. This tells us that really not a whole lot has happened. A lot of indecision between the bulls and the bears. So no real one party in charge is telling us that this week was more or less a consolidation, even though intraday or within the daily view you can see how we had some pretty wide ranges, but overall the week remained relatively flat. And if this continues, as far as the stochastics, this will allow the stochastic to come out of overbought, which is good. If you're bullish, this allows for the for prices to come out of that extreme condition and allow itself to work itself back to neutral before making another attempt to go higher if the market has more upside to go. But you can see how this 50-week moving average is going to remain as pretty strong resistance for the time being. Okay, going into a 6-month daily view, you can see how, like I mentioned, we had a couple of pretty wide range days on Monday and on Thursday, and then in between we got just basically consolidation dojis. So overall we are pretty much sideways trending right now. We more or less came back and came pretty close to retesting this critical support around 88. I think we hit 89 on Tuesday. So as I mentioned, right, once the support's broken, most likely the next one will be hit, or at least we came pretty close to. So short-term wise, within these last couple of weeks, we are establishing some kind of a downtrend. However short it's still a downtrend. So the only thing is, will this continue lower, or is this it? All right, we just have to watch the price levels. 93 would be your immediate resistance level. If that breaks higher, we most likely head up to 96. If not, we will probably come back and retest 88, and if that breaks, that would signal more downside to come. So just watch for these couple of levels. Okay, going into the VIX, you can see how we managed to break underneath this support level. So it's telling us that the bulls are getting a little more complacent, that volatility is dropping. However, we're not seeing that same correlation in the market where we're making a new high. So it's quite an interesting development. It's not something that you see quite often, but nonetheless, it's telling us that something's going on with the market where it's getting a bit overly bullish if this VIX continues to go down to where it starts to become almost a contrarian signal, where we're overly bullish, we're overly complacent, that it's probably best to be starting to short the market. But until then, we haven't exactly gotten that signal yet, but it's telling us that the market is getting a bit low on its volatility.